Hi there, you're watching Market Cafe on Niti Now with me Shreyansi Singh, and with me as always is Snehi Shah. And over the next 1 hour we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But first things first, Snehi, let's take a look at the US markets. And it's been quite some comeback coming in from for S&P 500 as well as Nasdaq, right?
Absolutely. Remember just yesterday I was tossing to you, telling you how Nasdaq is underperforming, more than 1% cut coming in on Nasdaq yesterday. And look at how that has reversed today. Hi there, good morning. Let's talk about what the US markets were up to yesterday. Stock futures hovered near the flat line last evening after S&P 500 rebounded from a rough start to the week. Now, and after our action, FedEx popped 14% after issuing adjusted earnings that surpassed estimates. Rivian Automotive has soared 48%. We'll be telling you more about why both of these stocks have seen such stellar moves. But in Tuesday's regular trading, both the S&P 500 and Nasdaq have ended 3 days of declines, buoyed by the bounce in Nvidia shares. Of course, Shreyansi, every time we talk about Nasdaq or S&P, it has to be Nvidia. There is no talking about both of those indices without mentioning Nvidia, because what an influencer or heavyweight it has been when it comes to deciding or influencing which way both of these indices are moving. Now, the 30 stock Dow is the laggard of the three major averages, sliding nearly 300 points. On the flip side, Nvidia's jump of nearly 7% yesterday also marked its first positive session after 3 days of consecutive losses. The artificial intelligence darling's market cap gives it tremendous sway over the S&P 500, like I mentioned, and its 154% surge in 2024 has raised concerns over a lack of breadth in this year's rally. Wall Street will shift its attention towards fresh inflation data on Friday with the release of May's personal consumption expenditures price index. Remember, the Fed keeps a close eye on this metric. It is their preferred inflation gauge, and investors will remain hopeful for the prospect of rate cuts. Quarterly results from General Mills and Paychex are due today morning, of course US time today morning, and Micron Technology will report earnings in the afternoon US time as well. So, well, very brilliant moves coming in from S&P 500 and Nasdaq. S&P 500 up 0.4%. Nasdaq ended the day with an uptick of 1.2%. Dow Jones, however, has slipped by 300 points, 0.7% cut coming over there. Well, that was the US. Let's shift focus and talk about what the European markets are doing, and strong moves coming from the US. On the flip side, you have Europe that has been languishing away because the entire screen of the European markets is in red as of now. DAX has closed with a cut of 150 points, 0.8% lower is where that index closed. FTSE also 0.5% lower is where it has closed, and the Pan-European Stock 600 also slightly under pressure with 0.2% cut coming in on that front. Airbus was down 9%, and that is what has weighed on these European indices, and chip stocks have also been showing some volatility because on one hand you have Nvidia doing pretty well and the European chip stocks on the others are languishing away. But while that was the handover coming in from Europe and US, Shreyansi, tell us with what's happening when it comes to oil, because I believe these global tensions, they continue to influence oil.
Absolutely, and global tensions are definitely something that we're seeing play out. But right now what you're seeing is that crude oil futures fell about 1% as the recent rally took a breather, with traders watching for summer fuel demand as well as tensions on the Israel-Lebanon border as well. Now, US crude oil and global benchmark Brent are ahead by 4.9% and 4.1% respectively for the month, as prices have bounced back from May doldrums on a more optimistic outlook for summer fuel demand. So that is the kind of picture that you have month to date. And when you take a look at the oil market on Tuesday, we did see a slip coming in prices because the upside momentum wasn't maintained. So now when you take a look at WTI, you're looking at $80 per barrel levels, a downtick coming in of about 80 cents or about 0.1% thereabout, and year to date US oil has also gained 12.8%. On your screens you do have the month to date percentage change that I talked about. For Brent, you do have 4.1%, and for WTI, it was 4.9%, like I mentioned. Moving on, let's also take a look at what Brent did in Tuesday's trading session, because you did have Brent being around $85 per barrel, a downtick of about $1 or about a little over a percent coming in for Brent as well. And year to date, the global benchmark is also ahead by 10.3%. The rally has taken a breather, but you do have geopolitical tensions that should prevent another rout in oil prices, because you do have tensions between Israel and Lebanon raising the risk of a disruption to crude supplies as well. Israel and the Iran-backed militia Hezbollah have threatened war in recent days after trading fire across the Lebanon border for months. Oil prices hit annual highs, mind you, in April as Israel and Iran teetered on the brink of war, stoking fears that a wider conflict could engulf the Middle East as well as disrupt crude supplies at the same time, and prices subsequently pulled back as tensions eased. Now, in terms of forecasts, of course, you do have JP Morgan that forecast Brent hitting $90 per barrel by August or September. Moving on, let's also take a look at gold then, and gold prices slipped on Tuesday, hurt by an uptick in the dollar as well as treasury yields, and even as investors awaited US inflation data due later this week. That could also be providing cues on the timing of interest rate cuts by the Federal Reserve this year. So, marginal downtick coming in for gold prices as well, Sneha.
Alright, so that's everything that's been happening with oil and gold. With that, let's also take a look at all the important events you need to be keeping on your radar today. When it comes to home markets today, the new Telecom Act is going to be coming into effect. So keep a close eye on telecom stocks, the likes of Vodafone, Idea, Bharti, Airtel and the likes of that. Moving on to the US then, you have some important data points coming out. You have new home sales, API weekly crude oil stock. Shreyanti was just summing up about what's been happening in crude, and this is going to be an important metric to watch out for in terms of inventory and supply when it comes to crude oil. Also, along with that, you have building permits data coming out of the US, so keep a close eye on that as well. Shifting focus back home, lots of corporate action on board meetings happening today. The AGM, or the annual general meeting of Wellspun Living, will be taking place today. The board of Inox Green and Z Media, they will be meeting today to mull fundraising. So keep a close on both of these stocks. NRB Bearings, that board is going to be meeting for general purposes. So we'll be keeping a close eye on any announcements that come out of that meeting today. And also today is the last day to buy shares of Aegis Logistics as well as HAL to be eligible for the dividend. Now, when we talk about the primary markets, also lots of action happening over there. You have one IPO that opens for subscription and two making their D Street debut today. Braj Iron and Steel IPO will be opening for subscription, and DEE Piping Systems as well as Asan Loans, also known as Acme Fintrade, will be making their D Street debuts today. So we'll be watching out for both of these IPOs hitting the markets today as well. Lock-in period ends for Abans Holding, where 20% equity comes out of lock-in today. And in terms of other news then, the election for the Lok Sabha Speaker for the first time since 1946 is going to be taking place today. Arvind Kejriwal bail plea hearing is also going to be happening today, so watch out for that and the developments on the political front. And also from globally then, ECB's Philip Lane is all set to speak, so important commentary expected from this speech, so keep a close eye on all of these cues in today's trading session.
Well, absolutely. There's a lot of cues to keep an eye on this week as well as today, but let's move over and switch the focus to the top global headlines this hour. Consumer confidence in the US eases in June. Street continues to fret over economic growth even as households remained upbeat on the labor market and expect inflation to moderate over the next year. Results also showed that consumers factoring in the likelihood of a recession over the next 12 months has considerably retreated from April and May levels. The consumer confidence index dipped to 100.4 in June versus 101.3 in May. The drop in confidence was concentrated in the 35 to 54 age group.
Meanwhile, some important comments coming in from the Federal Reserve. Governor Lisa Cook said that the central bank is on track for a rate cut if the economic expectations are met. However, she declined to put a timeline on their actions, and additionally, she believes with significant improvement on the inflation front and the labor market cool off, it will make it appropriate for the Fed to start policy easing at some point. Some recent inflation data has again shown progress toward lowering price pressures, but mindful of recent setbacks, policymakers have been cautious in providing guidance as to when they will be able to cut interest rates.
And what sent shares of American EV manufacturer Rivian soaring? Volkswagen Group is mulling a whopping $5 billion investment in the EV startup, starting with the initial investment of $1 billion. The additional $4 billion is expected by 2026, all funding expected to aid the creation of a joint venture to create electrical architecture as well as software tech. Rivian shares skyrocketed 50% in after-hours trade.
The big moves coming there. In other news we are tracking this morning, FedEx's Q4 results have topped Wall Street estimates. Shares of the logistics major soared 8% on a robust earnings forecast for fiscal year 25. Looking ahead, the company expects an EPS range of $20 to $22, which is above the midpoint compared to the analyst consensus of $20.85. They also anticipate a low to mid single-digit % revenue growth year-on-year and expect to achieve $2.2 billion in permanent cost reductions through its DRIVE program.
And moving away from the world of macros and equities, then China's lunar probe Chang'e 6 returns to Earth with the first ever samples from Moon's unexplored side. The capsule landed in the northern Chinese region of Inner Mongolia. The probe landed on the Moon on 2nd June, took off again on 4th June, and then spent 13 days in the orbit before returning to Earth. Chang'e 6's mission took a total of 53 days from its May departure. Remember, the return of Chang'e 6 comes within months of India landing its Chandrayaan 3 mission safely on the Moon's unexplored South Pole in August last year.
Well, interesting news coming over there, but viewers, with that, we'll slip into a very short break on this edition of Market Cafe. When we return, we'll take a look at how the Asian markets have opened up this morning, so you stay tuned. Hi there, welcome back. Let's take a look at what the Asian markets are up to, and largely mixed moves coming in from the Asian Pacific markets as of now, as investors are anticipating Australia's inflation numbers for the month of May. Australia's core inflation rate is expected to come in at 3.8% in May, according to a Reuters poll of economists, and this is higher than the 3.6% recorded in April. On the back of this, Australia's ASX 200 lost 0.7% at open, continues to build onto those losses, down more than 1%, an 86-point cut coming in on Australia's ASX 200. Meanwhile, let's switch focus and talk about an index that's gaining as of now, and that's Nikkei, because that opened with an uptick of 0.5% in the morning, more than 1% higher, 450-point jump coming in on Nikkei as well. Shifting focus to what South Korea is up to, Kospi has gained had gained 0.2% on open, rather flat right there, not doing much. Very flat moves coming in from Kospi as of now. Let's also quickly shift focus and take a look at what Hang Seng and Shanghai are up to this morning. Last I checked, both of those indices were in the red. You have Hang Seng on your screen, down with a cut of 0.2%. Not much happening over there, a roughly 40-point cut coming in. And Shanghai also 0.3% lower, an almost 10-point cut coming in on that front as well. Now, when we shift focus and talk about our moves back home, well, it was a day of record highs for, you name the index, Nifty, Nifty Bank, Sensex, broader markets, mid cap, small cap, all of those indices were at record high. We closed above that 23,721, scaling above 23,700 for the first time. Implied open as of now indicating a rather subdued start, because the levels I'm seeing is 23,706, slightly tempered than compared to yesterday, but global handover looking rather mixed. But remember, US has done pretty well, so let's just see how that pans out for our market, Shyansi.
Well, absolutely. Let's see how that pans out for us. Let's move the focus to climate change then. And climate change is the national conversation, and it is very real. According to EY analysis, India is the world's 5th most vulnerable country to the effects of climate change, highlighting the critical need for adaptation methods. Climate change, according to reports, would have a considerable impact on agricultural output and water availability in major river basins by 2030. While these figures are alarming, we are here to confront the climate problem by holding conversations and building accountability among all of us, including key leaders and policy stakeholders, through our first edition of the India Climate Summit on June 28th in Delhi. Join us as we march towards fighting climate change through sustainable solutions, only on Times Network.
Hi there, welcome back. Still watching Market Cafe on ET. Now there you have the Nifty implied open on your screen at 23,709. A rather subdued start compared to where we shut shop yesterday, 21 points lower. But let's keep it going with all the news flow and all the action at the 188th AGM of the Bombay Chamber of Commerce and Industry. The RBI Governor Shaktikanta spoke about India being at the cusp of major structural shift in growth trajectory. He also addressed stubborn inflation and why one wrong move in inflation management could throw us off track. Listen into what he had to say.
India is at the threshold of a major structural shift in its growth trajectory. moving towards 8% GDP growth in a sustained manner. We are moving towards annual growth rate of 8%. The Indian economy in the last financial year 23-24 contributed to 18.5% of global growth. There have been multiple drivers of this growth that we have achieved and the growth expectation that I am placing before you. It's driven by the various structural reforms which have been undertaken and several other policy initiatives that have been undertaken in the country. Among the structural reforms, at the forefront, I would like to mention the Goods and Services Tax, the GST. Flexible inflation targeting framework is very important because a stable inflation is at the core of long-term sustainable growth. That global growth is improving, but at a slower pace. But nonetheless, there is growth. Again, rural consumption, which was lagging behind for a long time, has picked up. The sales of FMCG goods in the FMCG sales volumes have increased in the rural sector. The external demand is also picking up. All international agencies, whether it is the IMF or the WTO or the OECD, all international agencies expect global trade volumes to be higher in the current year, and the private sector capex is now picking up. There is clear evidence of private sector capex now picking up. The private sector investment is picking up in specific sectors, for example, in cement, steel, all the sectors, most of the sectors associated with infrastructure. So we have to navigate our path towards the 4% inflation target with a clear and unambiguous focus and commitment to bring down the inflation to 4%. The battle against inflation, when you are dealing with the challenge of inflation, a single wrong move can just distract you, can throw you off track, and coming back to the track will be far more costly and will take much more time. Considering the mix of factors, I do not draw comfort that inflation is going to reach 4% just tomorrow or day after. It will take a few more months. I see some optimism in the next year. A lot of achievements have been done, but I think there is still a lot of work to be done in the agricultural sector, especially with regard to improvement of the supply chains and the value chain framework. But I think the agriculture in India has become in the recent years much more climate resilient than what it was, let's say, about 10 or 20 years ago.
And as we count down to the union budget, pre-budget meetings with the finance minister and top officials were conducted. The question of the hour is, what were the recommendations made by experts from the employment and skill development sectors as well? My colleague Prakashpriya Dari caught up with a lot of them. Listen into what makes it to their budget wish list then.
Industry, if they are putting skill labs, then it to be incentivized in some form. Might be tax reduction or might be little bit of grant and all that. So,
since you were representing CREDAI, so anything specific on the housing sector?
see, basically we have made suggestion on our skilling this thing, and skill labs we have suggested that skill lab need to be put up at village level so that people at source can learn the skilling and that can be bring to the mainstream.
Tax incentives that the government may provide to the employer.
Basically, we have made suggestion that skill, labor says, need to be utilized on skilling. And as far as tax suggestion is concerned, if someone is putting skill lab at their site, they need to incentivize.
There is a 16% year-on-year growth in the formal employment numbers, wherein new job seekers are being brought into the formal contract workforce. Now, these numbers can easily be grown further if the employment services as a category can be reduced from an 18% GST to a 5% GST. This employment is almost as much as a basic necessity as is food and housing for any individual.
The government should also come out with the kind of PLI scheme for the job sector where the more incentives should be given to the employee or the company in a case of generation of more jobs. So in a similar kind of recommendation, any such recommendation that you have made?
There is already a 80JAA scheme that is there for new employment generation, where we have requested the threshold can be increased from a 25,000 to a 50,000, which will encourage not only more job creation to happen, but women workers to come back who after maternity or family break are not able to be inculcated back into the workforce willingly, and there is a perceived disadvantage. The employers will find it very encouraging if there is some incentive given to them.
One of the areas where we really need to focus on is how to skill people and how to improve the quality of people we have. And so basically the discussion was on that what are the suggestions, and there were people from different industries who talked about from construction, from people working in the gig economy, agriculture, and the suggestions what the finance ministry wanted is that how can we increase employment and improve skilling. I will not talk about specifics. One on the finance side, that where can we give incentives, for example, or invest more in ITIs, incentive for employees for improving their skilling. So there were a lot of what the budget can do, and the other is on the policy side, that how can we encourage and fund more.
Anything on taxation?
Yeah, I won't know the specifics, but there were a lot of suggestions on taxation. For example, how to if companies are putting money into training and skilling, they should get some tax incentives on that side, and how to encourage industry to put more money in skilling and training.
All right, well, let's move on then. And with weeks to go for the union budget, auto component makers have submitted their recommendations seeking a hike in depreciation rates on plant and machinery from 15% to 25%, and also rationalizing GST on EVs and other components. My colleague Sumit Chaturvedi has more details on the budget wish list from the entire automobiles industry. Listen in.
Auto component sector of India is aiming for a big relief for them in the budget, upcoming budget, and they have released some of their demands. Well, this includes, first of all, increasing depreciation on assets including plant and machinery from 15% to 25%, and bringing down GST rate on EV and components and battery parts from around 18% to around 5%. Well, GST part definitely comes under GST Council, and meeting decides it. However, they are still hoping for some relief in budget from that. PLI, the production-linked incentive schemes, have also given overall relief to the auto component sector, and they hope this scheme will be continued and be made more flexible to give them more leeway when it comes to asking for more relief from the government. So these are the main demands made by auto component sector. And they are also saying that it will help them. The savings in GST will help them, and also in depreciation on plant and machinery will help them in making more and more capital expenditure. We're also learning from our sources in the finance ministry, some of this can be given as well, because auto component sector is a big generator of employment, gives a lot of jobs as well. That's why some of these demands could be met in the upcoming budget.
All right, thanks Sumit for that update coming in. Moving on then, HDFC Bank seems to have broken the spell that it was in since the third quarter results were announced. Over 1 month alone, the banking major has risen about 12%, being a major contributor to the record-breaking rally on D Street. So the bank turning a corner after the lull since the merger. Is the worst over for HDFC Bank? Gaurav is joining in with a detailed analysis. Gaurav?
Well, yes, HDFC Bank is definitely in focus, because if you look at this stock, this was actually a top performer when we talk about Nifty and Bank Nifty. And what happened in HDFC Bank and why this is important. So let me take you back to third quarter, where actually Bank reported LCR and LDR at around 110%, which raised concerns over the cost of funds as well as deposit growth. And on back of this, we saw EPS cuts coming up for HDFC Bank. If we look at the stock performance also, within just 5 days of third quarter's results, we saw the bank share price tanked almost by 14%. But even then, management was very sure that they will be focusing on the profitability. Now coming to the fourth quarter, what happened fundamentally in the bank is that bank actually reported inline set of numbers. In fact, when we talk about net interest margins, that actually increased, and it was above the street's expectation, which was actually a positive thing for HDFC Bank. So fundamentally, the bank has shown that they actually hold a strong position in the market. Apart from that, there are some other triggers which are now playing out. So first one is the entire private sector industry. What is happening right now is that earlier PSU banks versus private banks was a war, and now brokerages are being a little optimistic when we talk about private sector banks. And the main reason being that valuation. So when we look at some of the key private sector banks, they are now trading somewhere near the 5-year price to book value. And if we specifically talk about HDFC Bank, now that has even gone below the 5-year average price to book value, which actually makes an attractive case for a buyers. Apart from that, we recently got a note from Macquarie where they believe that the ROE for private sector banks could be around 16 to 18%, whereas we may see public sector banks struggling over ROE, and there are some other risk factors as well which are associated with public sector banks, because of which we may see some underperformance. Lastly, there is another trigger which is playing out for HDFC Bank, and that is the MSCI rebalancing. Now, what happened in the month of May is that we saw HDFC actually closely missed the target of FI holding almost by only 5 basis points. And why this is important is that when the MSCI reject would happen, what happens is that HDFC Bank currently holds around 3.89% of the weights in MSCI India index, and if the rebalancing happens, this weight will double from here on, and this actually could attract the value of around 5.2 billion passive income or inflow for HDFC Bank. When we talk about FII flows and why this is important right now is that let's take a look at some of the important data points. So we have seen FIIs have been selling since April and May, and we have seen this trend continuing in the May itself. Apart from that, experts suggest that bulk of the FII selling has been happening in the financial segment. If we look at some of the numbers, around $2 billion worth of selling has happened in the financial segment from 1st April to 15th May as per the data. And lastly, when we talk about fund flows, we will be watching out on how the fund flows will be till 28th June for HDFC Bank, because that will be a key to watch out for when we talk about MSCI reject. Now, talking about the stock performance once again, the stock has actually roared once again is what we can say. It has increased almost by 11% in a month itself, and in the last 3 sessions also this has been gaining in trade, and the share price has also regained its position of 1700 rupees, which was seen in January. So definitely there are few factors which are playing out for HDFC Bank. We are seeing the stock roaring, and it is fair to say that the lion is back in action when we talk about Indian private sector banks. So definitely watching out on HDFC Bank from here on.
Gaurav, thanks for taking us through such a detailed explanation on why HDFC Bank has been a buzz. And remember, yesterday also Indian private banks were the one that led the rally in Nifty Bank coming in. So stellar moves coming from the Indian private banking space and HDFC Bank in particular. Lots to watch out on that front. But Gaurav, while you're with us, also take us through all the important stocks that will be in focus in today's trading session.
For stocks, let's begin with CE Auto, because there is likely a block deal, and the block deal promoter, Mr. Rakesh Verma, could sell almost 5 lakh shares in the company via block deal. The floor price is expected to be around 5% discount to the current price, and the total offer size is going to be around 115 crore rupees. Next, let's talk about Exigo, the recent listing. This also saw a block deal yesterday. Steadview Capital Master Fund actually bought 20.1 lakh shares at a price of 163.83 rupees. So definitely watching out on this counter as well. Now let's talk about Gulshan Polyols, because company has now started commercial operations for ethanol at 250 KLPD capacity grain-based ethanol plant in Assam. And on back of this news, we will be watching out on this company as well. Mazgaon Dock is another company which is going to be in focus, because yesterday we saw the company came up with the official statement that they have submitted the bid for some of the projects. And now the Department of Public Enterprise has now announced Mazgaon Dock as a Navratna status. And on back of this news, we will definitely watch out on this stock as well. GMDC and GUVL is also going to be in focus, because these companies are going to collaborate to develop thermal lignite-based power plants in Gujarat. And lastly, let's also watch out for Mahindra and Mahindra Finance, because CFO Mr. Vivek Karve has actually resigned. Now, this was actually unanticipated move when we talk about Mahindra and Mahindra Finance shareholders. So definitely watch out on how the shareholders react and how it pans out for investors in Mahindra and Mahindra Finance.
Gaurav, for that update coming in. So we'll keep an eye on all of those counters in today's trading session. But time for a quick break right here on Market Cafe. When we come back, we'll take a look at some more stock-specific news. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at what the brokerages are saying bright and early this morning. And let's take a look at Adani Wilmar first. because Investec has come out with a note where they've initiated a hold with a target at 374 rupees. In terms of growth drivers, they're talking about how the long-term volume market share gain is something that they're highlighting, and in terms of the low margin nature, they see that capping upside for Adani Wilmar as well. Let's also take a look at what Jefferies had to say about ICICI Bank then, and they're maintaining a buy on the counter with a target at 1,350. When you take a look at what they're talking about the good asset quality. They're also seeing corporate book recovery as well coming in for ICICI Bank, and they're also saying that ICICI Bank is one of their top picks in the sector as well. So that's on ICICI Bank. Let's also take a look at the railway space, because we do have CLSE that's come out with a note on electronics and railways in particular. In terms of the key drivers, they're talking about Vande Bharat and Kavach being the key drivers as well, and they're also talking about the large capex program as well. In terms of the counters then, they're highlighting Amber, Keynes as well as Sirma SGS to see order inflows, and that is something that they're penciling in for these three stocks, Amber, Keynes as well as Sirma SGS. Let's also take a look at the key measures that CLSA is highlighting. They're talking about capacity augmentation, safety enhancement as well as the comfort of travel and ease of use as well. Lastly, let's also take a look at Stylum, because Investec has come out with a note where they've initiated a buy on the counter, and they do have a target at 2,362. They're talking about attractive ROCE in laminate as well as acrylic coming in for the company, and in terms of their EPS CAGR over financial year 24 to 26, they're seeing that at 11% coming in for Stylum. In terms of the potential MNC investment coming in, Investec is highlighting tech capability distribution as well as brand placement, and all of that is also something that they're tying in with the earnings trajectory as well as multiples coming in. So that's the handover coming in when you take a look at brokerage notes this morning, Sneha.
All right, lots of stocks going to be in focus on the back of brokerage notes, but we have Vinny joining us to talk about two more stocks that will be in focus today, Metro Brands and CG Power, on the back of some key takeaways from their management meets. Vinny, good morning. Take it away.
Good morning. Let's start with Metro Brands. Now, Goldman Sachs met with the management. Key highlights that have come in that, interestingly, the demand for non-wedding related footwear, now that's continuing to stable in FY25. The guidance is expected to be in the mid to high teens percentage in terms of a growth on a year-on-year basis. And overall, what they're saying is the industry's competitive intensity, that's still high. We're seeing that increasing there. But Metro Brands continues to be quite well placed in terms of this situation. Even overall, the inventory position is quite high versus the historical data that they have, but still they're keeping an eye out on that, especially given that Fila brand, they are seeing a good repositioning for the Fila brand. Mainly there was a delay in the BSI implementation that is impacting the Fila brand, but other than that, seems like a good note that they are expecting, especially in the second half of FY25 for the company. Moving on, we have UBS that's met with the management of CG Power. They're saying that the industrial product business is on a stable track. The management is optimistic, especially in terms of the power systems, and overall there is strong local as well as global upcycle that they're seeing that will support the growth of the company. CG Power is now targeting newer geographies that will be working out well for the company in the upcoming years, and UBS is maintaining a buy, hike the target price to 870 rupees per share. So positive notes coming in for both Metro Brands as well as CG Power.
Vinny, thanks so much for taking us through that. Let's also take a look at what the credit card data looks like for the month of May. And first of all, let's take a look at what Jefferies has to say on this. In May of this year, industry spending growth has moderated to 17% on a year-on-year basis. This is compared to 18% for the month of April. Credit card outstanding growth has also moderated to 18% on a year-on-year basis. And let's talk about some stock-specific moves in this entire credit card space. And for SBI cards, spending growth improved to 11% on a year-on-year basis. SBI cards share of industry spending inched up by 30 bips on a month-on-month basis to 16%, so slight positive coming over there. Growth in the card in force for SBI cards relatively stayed subdued, reflecting caution in new issuances. Now, among key players, spending share of ICICI Bank and IndusInd Bank inched up on a month-on-month basis, while that of Axis Bank and HDFC Bank fell month on month. Now, This is what JP Morgan had to, pardon me, this is what Jefferies had to say. Let's also move on and take a look at what Morgan Stanley has to say on the entire credit card space. SBI Card's May spending market share rose 27 bips month on month to 16%. Its year-on-year growth at 11% was higher sequentially compared to that 1% year-on-year growth we saw in April, but remains below the 17% for the industry. Now, slower than industry growth reflects the impact beginning from February of the RBI's recent notification on corporate card spending. Lastly, let's also take a look at what JP Morgan has to say, and they believe that May 2024 saw 760,000 net issuances or 7.6 lakh net issuances led by HDFC Bank, and industry cards outstanding up 18%, 203 million cards. Net issuances have seen some moderation over the last 2 months. Asset quality trends remain to be the key monitorable factor. So that's 3 brokerage notes coming in this morning on the entire credit card data for the month of May. You have Jefferies, Morgan Stanley and JP Morgan coming out with their views.
Well, absolutely. And let's keep it going with brokerage notes then, and let's take a look at what Bernstein India's strategy is. Now, when you take a look at the focus, they see that shifting to drivers that could shape revisions, and they're also keeping an eye on earnings movements across top 200 stocks. They're also saying that earnings are not keeping up with stock price movement, and in terms of earnings upgrades, then they're talking about upgrades in 39% of NSE 200. 77% of NSE 200 have seen positive price movements is something that they're also flagging as well. And in terms of the financial space, then they're talking about how that is witnessing modest 1.6% increase coming in, and all other sectors are flat or negative. So that is something that they're talking about. Let's also switch our focus to Goldman Sachs, and they're talking about the BFSI space. They're seeing concerns around the rural portfolio firstly, and they're also talking about how rural lending could weigh on earnings as well. So that's the view coming in from Goldman Sachs. On the BFSI space, let's also take a look at the counters that they see exposed to farm loans. So the ones that make it to their list are SBI, ICICI Bank, Kotak Bank, M&M Finance, as well as L&T Finance. Now let's also take a look at where they see exposure to MFI then in terms of the BFSI space, and they're talking about Bandhan Bank, IndusInd Bank, Credit Access Grameen, as well as L&T Finance making it to their list. L&T Finance also makes it to this list as well. Now in terms of the farm loan waivers, they're seeing an impact coming in terms of the PSB, so that is something that they're penciling in. And in terms of their preference in banks, then you do have HDFC Bank, Kotak Bank, Axis Bank and IndusInd Bank that make it to their list as well. And lastly, on the NBFC space, they also have Credit Access Grameen that makes it to this list as well, along with L&T Finance and Shriram Finance coming in. Now let's also take a look at the hospital sector, because Macquarie has come out with a note on the hospital sector. They're talking about how top line growth primarily is going to be driven by rate hikes. They're talking about how organic bed additions over 3 years will be 4 times that of past 5 years. Lastly, they're also talking about how they have an underperform rating coming in on Apollo Hospitals and Max Healthcare. And in terms of earnings estimates, then they're seeing that 9 to 22% below consensus. So that's the view coming in from Macquarie on the hospital sector as well, Sneha.
Alright, so banking and financial spaces and hospital stocks will be in focus on the back of both of those brokerage notes coming in. But let's delve outside the world of markets and talk a little bit about everything that's been happening. Today, all eyes will be on the Lok Sabha Speaker poll, which will be contested between BJP's Om Prakashpriya and Congress's K. Suresh. Remember, this will be the 4th time and the first in nearly 50 years when a speaker will not be elected by consensus. Let's keep it going with politics then, and Congress has announced Rahul Gandhi to be the leader of opposition in the Lok Sabha in a major leg up for the Gandhi sign in his parliamentary responsibilities, which is widely viewed as confrontational face-off with a dominant BJP. And in a big setback to Delhi Chief Minister Arvind Kejriwal, the Delhi High Court has stayed the trial court order granting bail to Kejriwal. The Supreme Court today is all set to hear Kejriwal's plea challenging the Delhi High Court order. Meanwhile, trouble seems to be mounting for the Delhi CM as the CBI is also likely to produce Arvind Kejriwal before a court and seek his custody in the liquor policy case.
Moving on then, over a month after mowing down 2 techies under the influence of alcohol, Bombay High Court grants bail to the minor accused, calling his detention illegal. The court declared the remand order illegal and set it aside. The bench of Justices Bharti Dangre and Manjusha Deshpande, while granting him relief, said that though the accident was unfortunate, he cannot be kept in an observation home. Moving on to some news. Globally then, protests against tax hike turns violent in Kenya as hundreds of protesters attempted to breach Parliament House in the capital Nairobi. Reports also suggest that some protesters were killed in firing by the Kenyan police. The tax hike comes amid rising food and living costs in Kenya and in the wake of previous tax hikes in 2023.
Alright, that's a quick wrap on everything that's been happening outside the world of markets in India as well as overseas. But viewers, with that, we're completely timed out on this edition of Market Cafe. But while Shreyansi and I bid you goodbye, you stay tuned because the market takes all the action ahead.
If you like this video, then like, share and subscribe to ET Now.